Welcome to the Markets in 3 with your host, John, Senior Market Analyst here at Anzo Capital. I'm here to tell you about the important things that are going on in the FX markets and some key charts to watch. So welcome to the show. We're going to kick it off with the usual chart check, and we're going to check out one market in particular that I'm looking for opportunities on today. And that chart is the New Zealand dollar versus the US dollar. I actually mentioned this in the Markets in 3 newsletter. So if you are an Anzo subscriber and you are attached with Anzo Capital, you should receive the Markets in 3 where I give key updates to markets. And one of those is New Zealand dollar versus the US dollar. So what are we essentially looking at on this market? Well, from a technical perspective, we've got a lovely downward trend here developing on this market in particular. We've got really nice lower lows and lower highs forming from it. But the question is it going to continue? Are we going to see a continuation of this move to the downside, or will price reverse at some point? Now, the thing is with technical analysis is that can give us an insight just by looking at the chart, by observing price action. But also, I like to look underneath the hood a little bit. I like to see why a move is forming and why we're getting a potential downward trend here on the New Zealand dollar. Now, one of the things that I like to incorporate in my trading is the currency strength meter. So let me just bring this into play here. And you can see from a currency strength and weakness point of view, we have the New Zealand dollar as one of the weakest currencies at the moment. We can also see that the US dollar is one of the strongest. So naturally, when I'm coming to look for potential trades and opportunities in this trading week, I'm looking to pair a weak currency with a strong currency. Simple as that. And if we try and do that more than often than not, we're going to be on the successful side of a trend. Okay, so let me just bring in a pen tool here before we move on, because what I want to be looking for is these conditions to match what my idea is. So the way I like to trade is I like to spot a currency that is strong and a currency that is weak. So like I said, US dollar is getting stronger, the New Zealand dollar is getting weaker. We can see this on the weekly change table as well. The New Zealand dollar lost 2 points last week versus the US dollar, which lost 0 and remained at the top spot. So what I like to do then is say to myself, well, okay, well, if I've got a strong and weak currency, how do I go and trade that? What conditions do I need to see to go and trade that market? So if I'm looking at US dollar is the strongest, Kiwi is the weakest, I want to see a downward trend forming out of that market. I want to see the market making lower lows and lower highs. Then I want to be able to, if those conditions are met, then I want to be able to apply a strategy to that market. And that's exactly what I want to be looking at today. So the New Zealand US dollar is on my watch list. We do have a strong dollar. We do have a weak New Zealand dollar. So if I go back to the New Zealand US dollar chart, what do I look for next? It's the conditions. Do we have lower highs and lower lows? Yes, the market is making lower highs and lower lows. And recently, price has come into an area of resistance, which is around that 0.5690 handle, that 0.57 area, which is formed from these previous swing lows back in April. So that could be a potential area where sellers start to come back into the market. And I say potential because we don't know what's going to happen next, right? So we have to kind of plan where we want to get involved with the market. Now, this is an area of structure. Structure can act as resistance. So that's why my first option is looking for potential breakouts to the downside on a lower time frame, which I'll show you in a second. The second option is to sell from a higher price, right? And that higher price could be another area of resistance, right? You can see around about that 5.775 handle, we've got another area of support and resistance, okay? Mainly resistance in this case because price is below. So I'm looking for price to potentially even come back to this area here for another short opportunity. Another thing I like to look at is the 50 daily moving average. And price is currently trading below that 50 daily moving average, which is that gray line in here. So that's great. First of all, I can tick it off and say we've got a strong US dollar, we've got a weaker New Zealand dollar. We have a downward trend that's been forming. Great, fantastic. How do I take advantage of it now? So now we can start looking to apply a trading strategy. Okay, so one of the swing trading strategies I like to use is the hourly chart. I like to bring in the 200 and the 50 moving average, as well as a stochastic oscillator. Okay, keeping it super, super simple here. And what I like to look for are changes of trend, okay, and breaks below the 50 moving average. That's what I'm going to be looking for. So you can see here at the moment, the price is pulling back. We've got, like, if anything, we've got higher highs and higher lows forming out of the 1 hour chart at the minute. So I need the hourly chart to start agreeing with the daily time frame. So how will that happen? Well, one of two things. We either see price form a new low, rally, make a new higher high, and then price breaks that low and we continue down, or price breaks current lows, which is around about this 56.61 handle, right? If it breaks below here, breaks below that 50 moving average, that's going to be my first entry. So I'm going to add a position in at that point. Second entry is going to be if price forms in terms of the 50, 200 moving average, and the stochastic oscillator is in that oversold condition. Let me take you back a little bit. Let's have a little look at what happened when price does that. Okay, so this was the previous pullback that we had on New Zealand US dollar. What happened was price started to make new higher highs, high lows. It double topped, it broke through. Okay, market then sold off, came back into resistance, and we had a oversold condition on our stochastic, a close below the 50 moving average. That would have been my second entry. First entry break on the neckline, second entry in and around that 50 moving average. Okay, and you can see price fell away. So that's what I'm going to be looking at now. When we're looking to see, can price do a very similar thing? We're already starting to get kind of like the opportunity of a double top pattern forming. The other option we can obviously look for is selling at previous highs. I love to do that. You know, if price comes into this high here and starts to fall off, then that's great. That requires you to go to a little bit more of a lower time frame. So for me, if I was going to trade that type of position, I'll be looking more at a 15-minute time frame. I'd be eyeing up this high area in particular, and I'll be waiting for price to come back into that area and just looking for a very similar change in that trend. So if the market comes in, makes a new high, forms a double top pattern, breaks, there I can look to potentially be an entry for me and move on like that. The second thing I like to use, and this was how I was taught to look at some markets as well, is by using a 30-minute time frame and looking at the Heikin-Ashi candles. Okay, now the Heikin-Ashi candles are a little bit different to normal candlesticks. They open sort of halfway between, but they also kind of look at momentum a little bit more as well. So let me just change the body of some of these so we can see what we're doing. There we go. Like that. So another technique we can try and use is by using a different sort of chart type, that being a Heikin-Ashi candle. So if I do see a push into this level and I start to see strong selling candles, okay, so ones that don't necessarily have a wick to the upside, or at least larger than the usual candles that we see, that can give me another reason to enter the position. Okay, so I don't like to enter my positions all at once. I like to build into a position. So for me, I'm happy to take an initial sort of trade around these kind of areas if I get the right conditions met. And then if I get sort of like a continuation of that, I will then add into the position as hopefully I can scale into it essentially. So that's my plan here for New Zealand US dollar. We've got this really nice downward trend that's developing here on the daily chart. We essentially are, you know, in that sort of phase 2 of the daily chart, right? So that's the retracement phase. So technically, the lower time frame is going against the trend, right? Which is great because that gives us options. It gives us a little bit of an alert to say, wow, this could potentially kick off as an opportunity. Okay, so that's one of the benefits of using a currency strength meter, because it gives us a little bit of direction. The reason why I built this currency strength meter in the first place was because I was one of those traders that was just purely manual. So I'd go and I'd onto my trading view or MetaTrader platform, and I'd sit there and I'd just click through every single one like this, going like that, looking for the right conditions to trade. However, Markets are a lot more complex than that, and that's exactly what I've learned over time. But the easiest way to try and find this is by looking at something called currency strength and weakness. So that's what I use this tool for here. You can see it gives me trade signals and monitors all 28 forex pairs, and I'm looking for the potential opportunities. So for instance, if we take a look at pound Aussie, this is still on the list. So we were looking at potentially going pound Aussie long last week. However, it was a bit of a tumultuous week last week, but we did eventually see price rally to the upside. So we were looking at potentially going pound Aussie long on this market. We were looking at the daily chart, and we were saying to ourselves, well, if we do see that kind of break in that trend here, we could look to go long. And look, market has rallied to the upside. I wasn't particularly in this move, but it just shows you that if you look at strength and weakness and then you monitor the charts on a daily basis, and those charts in particular, you can get these types of opportunities. A good example for this one, just bob a volume profile on here. You can see, look, price comes back into the most traded level. It's these areas in here. What happens? We reject. We see a continuation to the upside. Okay, so that's important to keep in mind. So I like the New Zealand US dollar short idea. I think this could be a good market to look at. Obviously, we have moved a long way. So usually you want to be a little bit more cautious when you take one of these kind of trades. If I use a volume profile here, the most traded levels are up towards that 5-8 handle. So that's going to be the area when you're going to get the most reward to your risk, right? Down here, you need to be a little bit more cautious because price has moved so far. But nonetheless, I still think it's a good opportunity to potentially short from my side. So I am looking actively to get short on the New Zealand US dollar price. So moving on from that then, what are we going to be taking a look at today in terms of the big story? So I'm actually going to take you through the commitment of trader reports. Okay. Now, if you are unfamiliar with the commitment of trader reports, don't worry, I'm going to talk you through it. So the commitment of trader reports are a report that is released every single week that tells us where large speculators are positioned in the markets, on the futures market, right? It tells us how businesses are positioning themselves from a commercial entity standpoint, and it also tells us how they're called non-reportables, but essentially it's the sort of lower level speculators. And what it is because they're trading such large amounts of money and contracts, the futures board asked them to announce those positions, so there's no kind of like dodgy moves going on and no manipulation of markets. So CFTC provide us with this report. You can get loads of different variations of it. I think these days you could probably build your own AI system to have a little look at those reports because they are free. All you need to do is come over to the CFTC website, come down to the commitment of traders, right? And you can have a little look here, right? And it gives you loads of little notes and analysis and everything like that you can come and take a look at in your own time. But they are a free report and they get released, they get accumulated on a Tuesday, released on a Friday. Now, going back to the software that I use, so I use something called Markets Made Clear, just really helps me when I'm looking at positioning. They have really interesting ways of digesting that data. Now, one thing when I look at is I like to look at extremes, or what's known as extreme positioning. And if I take a look at what that means just here right now, you can see that we have the commercials here and it has these percentages, right? Along with an index of 36, 18, and 6. What does that mean? It just means that is a 6 month time frame, an 18-month time frame, and a 36-month time frame. And what it means is that these contracts are at their highest levels within that period of time. Okay. So if we take a look at British pound sterling here, for instance, and this is one that I want to talk about today, the commercials are buying pounds at an extreme level. So that tells me that hedge funds are short pounds at an extreme level. Okay. The reasoning behind them doing that is largely down to the economic indicators that are coming out of the UK, for one. For 2, you can have political uncertainty as well. Recently, we've had a change in Prime Minister in the UK. And we don't know who the Prime Minister is going to be yet. It's heavily suggested of what it's going to be. But Keir Starmer has officially resigned as Prime Minister. Political uncertainty can add to a depreciation of a currency, okay? Because of uncertainty, what policies are they going to bring in? X, Y, and Z. What changes are they going to make? Now, from a commercial standpoint, as the pound gets weaker, they are naturally hedgers, right? So they are buying pound, okay, because they are hedging future prices. Now, if we have a little look at the chart here, what we have are British pound sterling futures, okay? Now, for us, that is equivalent to the pound US dollar on the CFD front. But we can see here that the signal is telling us that contracts have been at their highest level for a long period of time. Now, if we scroll down, we can actually go into the details of these reports, okay? So we can look at the net positionings, right? So this is the commercial positions, and we can see that the net contracts have reached a significant level. Now, if I actually just scroll back a little bit, the last time that commercials really got around these levels were back here, okay? So that is in 2019, right? Now, look what happens to the price. So this is the last time we've got a signal that's pretty much in line with that amount of contracts on the net side. This is a weekly chart, by the way. And look how prices have increased over that week. So that's something to just be aware of when you are looking at this. We want to be looking at previous times that have kind of represented similar things, okay? Now, if we take a look at the previous sort of one here as well, we have this, which is those peaks in those contracts there, which relates to this price action. And look, price has moved to the upside. Now, what you'll notice about this weekly chart of pound US dollar, so if I just go to pound US dollar here, and we just pop up to the weekly chart, you'll see that we are technically in a bit of a range, right? We've been ranging really since 2025. We've got these kind of, oops, that's not how you draw a line. These highs in here around about that 137 handle, and these kind of lows in here around about that 132. It's more of like a bit of a zone on the range side, right, with this recent sort of breakout to the downside. So really speaking, we're coming into the bottom of this range, and we've got an extreme positioning from hedge funds, from commercials. We're going to take a little look at that just to show you how that is reflected from the non-commercials point of view. So this is your hedge funds, right? If I take off the long and shorts here and we look at the net short on that, again, it falls straight in line with these previous highs in here and those previous lows there. So potentially we could be looking at a pound that is about to reverse, okay? So I'm very much on the edge of looking for pound opportunities, because that combined with the fact that the currency strength meter is telling me to buy pound against certain pairs, especially when it comes to, the Australian dollar, the New Zealand dollar, the Swiss franc. I want to be potentially looking for those opportunities. And like I said, we did like the idea of being long pound Aussie last week and the week before that, because it was reflected on the currency strength meter. And look what happened in price. We had that nice bullish move. So really speaking, if we do see that kind of continuation, maybe even a pullback rally breaker out of that 193 and a move to the upside, then I want to be looking to potentially buy on the trend reversal here. Similar with Kiwi as well. It was saying that we should be looking to buy Kiwi as well. Sell Kiwi against pounds, and look at that big strong move to the upside in there. And the other one was the Swiss franc. And we can see we've got this kind of little upward trend that's developing here as well. So really speaking, pound is on the watch list this week because of that significant commitment of trader reports signal, where we're seeing that sort of contracts at 100% on the commercial side. So keep your eye on that. We've got an extreme on the pound. We do have an extreme on other currencies as well, but I'll get into those in another market in 3. So I always like to end the stream with what's called the skill of the day. Okay, and the reason why I like to do this is because I really want to try and upskill traders and help them understand markets a little bit better. So the one that we're going to be looking at today is the engulfing candle. Sort of, what is it? How can you potentially trade it? Now, the engulfing candle is really, really simple. Like if I can just find a sort of, oh, here we go. Perfect example, right? This candlestick pattern here is what's known as an engulfing candle. Why is it known as an engulfing candle? Because it completely engulfs the previous candle's price action. You can see that the market comes down, takes out the previous candlestick low, rallies, takes out the previous candlestick high, and closes higher. Okay. Now, you don't technically have to see it close higher for it to become an engulfing candle. It can just be wicks either side. But my experience of trading with engulfing candles is you wait for the close above or below. You know, this is a bullish example of an engulfing candle, but a bearish example is just the opposite. If price had opened, spiked the high, closed down back below this candlestick low here, it'd be a bearish engulfing candle. Okay. But I like these candlesticks because it shows one or two things. It can show real change in momentum. Okay. It can show that sellers that had been aggressive turn into buyers, right? And you can see that with price here. You've got a really sort of strong downward move that's forming in the markets, right? And then you get a big move of volume plus that aggressive engulfing candle close. And look what happens to price after the fact. Now, I'm not saying this happens every time with an engulfing candle. That's not the case at all. But in my testing and studies, the engulfing candle is one of the best candlestick patterns that you can trade. Okay. And the only reason behind that is because it does show that effort. It shows that sellers are getting out and buyers are taking those sell orders, and you start to see big moves. You can see here is another example of the bullish engulfing candle. You've got a few bearish ones coming in here. Then you have a market that breaks the low, closes back above the high there, just about. Market rallies. We've got another one in here as well. I mean, pound Swiss is probably not the best example to use when it comes to engulfing candles because they're probably a little bit everywhere. But there have been some engulfing candles in the past that you can look at. Look at euro dollar. So this is a really good example of not a great engulfing candle and then a good one, right? So I would say this candlestick here is an engulfing candle, and this candlestick there is also an engulfing candle. Now, what you'll notice is, if I just get rid of some of these lines off here, I can redraw those in a bit. You'll notice that look at the first candle, right? The first bearish engulfing candle. It closes within the previous candlestick range. That's not a great engulfing candle. Those are the engulfing candles that I tend to ignore. However, look at the next one. And I know we're looking in hindsight, so everything's 2020 here, but you get an engulfing candle that's bearish. It closes below the previous low, and then we get a catalyst that moves on. Okay. Now you might think, oh, you're on a daily chart. That it's going to be price action works better on these time frames. Yes, it does. But if you're a trader and you like to trade intraday, you can use that information. You can say, okay, well, the daily's closed as a bearish engulfing candle. What can I do to try and take advantage of that? So you can go into your next trading day and you could look for opportunities on your lower time frames. Perhaps you could look at, your 15-minute chart, and you could have a little look at, will I get a sort of break in that trend, which happens here, and can I try and trade that in line with my expectations, right? So think about it a little bit differently. The daily chart price action of an engulfing candle doesn't necessarily mean you have to trade it on a daily chart. It could give you that signal for you to go to your lower time frame the next trading day. So that is an engulfing candle. Summed up, basically, I like them a lot. I use inside candles, engulfing candles, all that kind of stuff. But essentially, that is just a way of you to be able to kind of give yourself a little bit of an alert or a little bit of a trigger into the market. So just to have a little recap of what we've talked about today. We've talked about the New Zealand US dollar. I like the idea of potentially being short on Kiwi dollar. I'm looking at either this 56.90 handle as a resistance or this 57.75. The next thing I like the look of is potentially pound longs. The reason why pound long is interesting to me is because of the commitment of trader reports showing 100% on the commercial side. So we've got extreme positioning coming from the commitment of trader reports. That combined with the fact that the pound is the second strongest currency from the currency strength meter. Okay. So those are the two things that I'm watching for. We also covered engulfing candles, and that's it. So I hope you enjoyed the video today. Look forward to seeing you tomorrow, and hopefully we get some fresh market moves and trading opportunities. My name's John. I'm the host of Markets in 3, the senior market analyst here at Anzo Capital. Thank you for joining me today. If you did like this video or like this live stream, please leave it a thumbs up. Subscribe to the YouTube channel for more. We've got a lot more content coming. Thank you.